Hello everyone and welcome back. My name is Greg Freeman, market analyst here at TraderPlanet.com, and these are the market positions for January the 20th, 2011. Now our trading day today a little bit mixed. We're down a little bit on our US Swiss franc trade, the dollar taking a hit again today. However, our two-year note, the two-year treasury notes did quite well, so a bit of a 50-50 split there depending on what you're trading. So looking at ahead for tomorrow for January 20th trade, depending when you're looking at this on the evening of the 19th or the morning of the 20th, what we're looking at here are March 2011 cotton futures. Now there's definitely some opportunity forming here in my respectful opinion. What we're going to do is we're going to go through this and have a look at this with the Vantage Point software. Now the first thing I'm looking at here are the major crossovers. We have the short-term crossover from Vantage Point that is sitting quite good here at the just making that crossover to the upside. Now looking at the medium-term crossover, this is actually crossed over a few days ago, but very close to the simple moving average, but everything still looks good that it's going to move higher. Now looking at the long-term crossover from Vantage Point, we can see that that is also made across to the upside. Now what we have here is the predicted short, medium, and long-term differences are all above the zero line, essentially at trend ready levels in my opinion. Now again, looking today, we've mixed it up a little bit. I have the predicted stochastic from Vantage Point up on the screen here. We can see that we have a fresh crossover on the trigger to the upside, sitting just down at trend ready levels. We have plenty of room to move here. We can see on numerous other occasions from Vantage Point the stochastic crossing here. A day or two later we got a real nice move on the cotton. When it crossed to the downside, same thing, we got a move down here. And then we've had this little minor little mini uptrend going here, but it looks like it has room to start getting some legs here. Now our predicted true strength indicator is not unfortunately in agreement here. We're waiting for it to turn positive, but we're gonna jump on this one a little early. Now what we want to do now is identify key levels of support. We've closed at 148.94. We have 146.63, 145.75, and 144.57, which would be our major level of support. Now when we have a strong trend like this, the area of 146.63, the 3-day predicted moving average, is used as a pivot point because again this trend is very fresh. So we've clearly identified we want to buy the cotton on a dip here. Now what we're going to do is, we're going to go into the daily report from Vantage Point to get further confirmation on this position that we're getting ready for a break to the up. Now for tomorrow, we can see on our daily report we have 147.13 for the low and 149.59 for the high. The neural index up for the second straight day in a row. Now you can see the mixture here. We've had the neural index up, then down for 2 days, followed by 3 days up, then 2 days down. Now we're on our second up day, potentially going into our third update, third up day, I should say. So 147.13 is the predicted low for tomorrow. Now, again, the area that's of interest to me is down at that 3-day predicted moving average at 146.63. In my opinion, it's going to break somewhere between the Vantage Point predicted low and the 3-day predicted moving average at 146.63. So for tomorrow, we're going to split the difference here. We're going to go in, look to get into this thing around the 146.90 area, and then again, we're going to be looking for a move towards the 149 level. And I think we shouldn't have too much trouble getting it. So your more aggressive traders can go in around the 147.17 area. Your less aggressive traders, they can wait for a little bit of a deeper pullback, but don't wait too long, because when we have a trend like this, this suggests that the move is going to be, it could come, the pullback could be very shallow, and then we could see a very quick spike. Now that's our first position for tomorrow. Now our second position for tomorrow is going to be somewhat more of a volatile currency pair. We're going to be looking at the Aussie-New Zealand currency pair. Now this one is going to be somewhat of a counter trend position. What we're looking at is using the shorter term indicators from Vantage Point, specifically the short-term crossover, the predicted stochastic, and the predicted true strength indicator. Now our stochastic has just crossed the trigger. Our short-term crossover is also crossing to the upside, but our other crossovers are not really in agreement. So this is not necessarily a longer term trade. We can see that our long-term crossover and our medium-term crossover are both not really in agreement that from a longer-term perspective the Aussie-New Zealand pair is going to move higher. However, in the shorter time frame over the next 24 to 48 hours, I believe that it is going to move higher. So what we're looking at here, we can see that our predicted short, medium, and long-term differences have all turned and are pointing higher. Our predicted short-term difference specifically has now just broke over the zero line, and that's again consistent with our short-term crossover. Now, it's very seldomly do I put out trades that with using solely the short-term crossover. You can see that I'm using it in conjunction with that predicted stochastic and that short-term predicted difference, and potentially we could be getting ready for a trend reversal on this Aussie-New Zealand currency pair. So with that said, let's go in now and look at the predicted high and the predicted low from Vantage Point, the daily range, what we're looking at trading. Now for tomorrow we have a range of 130.31 and 129.34. That's our predicted range for tomorrow. This is the second straight up day in a row that we've had. Now what we also want to do with this is have a look at the last few closes. Now we've closed at the last 3 days. We've started in the 128.96, then we've gone to 128.57. However, the interest here is we then closed at 129.42, and then today we've closed at 129.91. So that is definitely bullish in my respectful opinion. Now, looking at our predicted low for tomorrow of 129.34, I'm not sure that we're actually going to get that. Now, yesterday Vantage Point said the predicted low would be 128.92. Let's actually have a look in the chart here and see what it was. Our predicted low for today was 129.06. So we can see that it did actually move. It didn't actually hit that low, but it did come very close, but it was still a higher low. Now, not by much. Again, 128.92, we're talking 10 pips here, but still it didn't get down to that low. So for tomorrow, I would be looking in the 129.50, 129.60 area to get into the long positions, and a potential target on this trade could be the 131 area. I think we're going to extend higher than 130.31. It's currently 7 p.m. Eastern Standard Time. Aussie New Zealand is currently trading above the 130.30 level, so we're going to have to now wait. It's already surpassed the recommended high from Vantage Point today, so the pullback is going to be very, very shallow. Now, with that said, I'm going to go back into the charts and have a look at potential areas that are going to be an issue. Now, looking at our charts here, we've got three levels of resistance. We have 130.52, 129.80, and 129.55. You can see that we've closed above two of these predicted moving averages from Vantage Point, and we're very, very close to the third. This is, again, somewhat of a bullish signal. Now, the triple EMA crossover is still to the downside, but like I said, our shorter term indicators are warning us that this is getting ready to push higher. So we want to watch this 132.50, 130.52 area. Once we get above that, it should move towards that 131 area. But again, we're looking for a minor pullback, probably towards the 129.50, 129.60 area, and we're going to use that to get into our buy positions. So our short-term intraday traders, they would be exiting around the 130.52. Your longer-term traders that are looking at potentially staying in this trade, 131, 132 is certainly not out of the question under the current market conditions. So those are the trades for January the 20th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.